Hello, listeners. Thank God today is Friday, and I'm thrilled to welcome you to another intriguing episode of our program series, Infrastructure Dimensions and Economic Development on Amorgate Radio Communications. I remain your host, Titilola Ogushono. We've looked at the role of financial infrastructure on economic development of a nation. And the last three episodes, we have started assessing the top three countries with the most thriving SMEs in Africa. We have discussed in details Kenya and Mauritius, looked at different economic policies, different financing policies that have been implemented by their government in order to provide enabling business environment for SMEs to thrive. Today, we'll be looking at the third African country with thriving SMEs, and that is not that country but Rwanda. And there are quite some interesting statistics about Rwanda that we would look at. Okay, in Rwanda, SMEs account for about 90% of businesses in the country. And these SMEs contribute about 55% of the country's gross domestic product, the GDP. That is high. And also, SMEs provide about 60% of total employment in the country. And the country has come a long way from the 1994 genocide to 2007, when Rwanda became the first African country to sign the Comprehensive African Agriculture Development Program. This is an African Union initiative tailored to increase investment in agriculture, and research has revealed that about 10% investment in agriculture in Rwanda has led to about 6% growth in that sector. That is quite commendable. No wonder Rwanda is one of the top three African countries with thriving best fit SMEs. If you look at the 2020 World Bank Doing Business report, Rwanda ranked at the second easiest place to do business on the African continent. And this shows deliberate and strategic efforts of the government to reducing bureaucratic bottlenecks and create an enabling business environment, ensuring that the startup ecosystem is more open to new investors. And in this particular report, we had Morocco placing third. We had Mauritius at the first position with 81.5%. And this same ranking out of about 150 countries as a global listing, Rwanda plays 38th position, when we add the likes of Nigeria at 131st position and South Africa at 84th position. For ease of doing business, the governance factors are considered, about 10 of them. The first one is, how easy is it to start a business in your country? Is it very easy? Is it difficult? Is it seamless? The second is, how easy is it to deal with construction in your country? The third one is the permits that are required. Are they easy to get? The third speaks to infrastructure, to getting electricity, because it's vital, okay, for businesses to thrive. Okay, the fifth is registering property. If you need to register your property, how easy is it for SMEs to do that? Because all of these factors I've spoken to, the fifth one will speak to the ease at which new investors will come in. How seamless is the process? The sixth governance factor is getting credit, getting access to finance. And that's why you can't talk about infrastructure dimensions, you can't talk about economic development without looking at financial infrastructure that we have been considering thus far. The seventh is protecting minority investors. The eighth is paying taxes. The ninth is trading across borders. And the 10th is enforcing contract and resolving insolvency. And it should be noted that each of these factors carry equal weight. So these are the governance factors that will determine how easy it is for SMEs, investors to do business in your country. While Rwanda, in a 2021 ranking by Rand Merchant Bank, RMB, Rwanda ranked fourth in investment attractiveness in Africa. So it's ranked as the fourth most attractive country on the African continent when it comes to investment. And the RMB, that's the Rand Merchant Bank, is a leading African corporate and investment bank. It's actually a part of First and Bank, one of the largest financial institutions on the continent. So it's a credible ranking. So what I tried to do was look at various policies that the government of Rwanda has formulated and implemented to help the growth of SMEs. And one of such policy is the entrepreneurship development policy. And part of the objective of this policy is to build a culture of entrepreneurship in the country, to facilitate easier access to business development services, to increase and enhance access to finance, to ensure seamless and efficient regulatory framework tailored towards the growth of SMEs in the country. And also the key focus was really on key value sectors, which include the agro-allied, the mining, and tourism. Yes, which other policy helped them? They have the small and medium enterprise development policy. And the vision of this policy was to create a critical mass of viable and dynamic SMEs that will contribute significantly to the national economic development. And if you look at the key words there, viable and dynamic SMEs, because if the SMEs are not responsive, if they don't have the ability to be resilient, if they don't have the ability to adapt quickly, to changes in the global market, that's no way they're going to be able to contribute significantly to national economic development. So the vision here was to support SME in such a way that will make them responsive. And the mission of the development policy, the SME development policy, was to stimulate growth of sustainable SMEs through enhanced business support service provision. The second was also to create more access, easier access to finance. And the third was creation of a conducive legal and institutional framework for SMEs. Having this policy as the bedrock, as the foundation, is very important, because all other initiatives, all other programs, all other collaborations that I have researched and have seen that the government did will be premised on achieving this clear set objectives. What other policies do they have? They also had what we call the Rwanda Development Board, and the specific objectives of this board was to implement programs, networking opportunities, and support SMEs in accessing funding. Okay, and the third was to enhance their level of competitiveness both in the local and international market. That was the mandate of this board. And as we go on, we'll talk about if this mandate was actually met and what have they been able to do with this board. Likewise, the Rwanda Development Bank, RDP, was formed with the purpose of coordinating and combining all services and support for Rwanda private sector development. The vision of this board was to transform Rwanda into a dynamic global hub for business investment and innovation, focusing on the macro situation in Rwanda. Also, to support the growth of MSMEs in Rwanda, that's the macro, small, medium enterprises in Rwanda, the likes of the Rwanda Business Forum, the I&M Bank Rwanda, the European Commission, European Union delegates, and FMO came together to launch a 10 million USD Nasira risk sharing facility. So this Nasira risk sharing program or facility, that is NASIRA, is in the form of a loan portfolio guarantee. And what it does is to support financial institutions to increase lending activities, facilities to MSMEs. Now, because of the risk involved in lending, okay, banks, financial institutions will want to hedge their risk by asking for collaterals, okay, and more often than not, most of these MSMEs might not have the adequate collateral. So it means that they will not have access to finance, and once they don't have access to finance, they can't even expand, they can't increase their production capabilities, they might not be able to even get the required machineries, technology, adopt the right technology that will improve the level of efficiency in production, and that will speak to the total level of production at the macro level in terms of the value of the GDP. Okay, so banks are there, they have the capital but want to hedge their risk. So this intervention actually came in very timely, because whether I like it or not, some sectors that should be productive, that should add to the productive capabilities of an economy, will be underserved. They won't have access to such facilities. So the focus on this Nasira risk sharing program in Rwanda was actually more on that said business segment, those who are often denied access to financing because of higher credit risk. Examples: the small farm owners, women-owned businesses, youth-owned businesses. So you realize that the risk here is high. So that's the essence of this. So the risk is shared, between the financial institutions, the lending institutions, and this program. So this money is as like a backup strategy plan to encourage financial institutions to give out loan to this underserved segment. Also, this program was to support financial institutions with tools to assess and monitor these sectors, these prospective clients more effectively, not just the financial aspect alone, also supporting them with the right tools. Thus, the main goal of this Nasira guarantee is to reduce the perceived and real risk of lending to the vulnerable and underserved parts of the country. Okay, that's the real goal, so that the underserved, the vulnerable, would have access to finance. And for those hearing about the IMM Bank for the first time, it was incorporated in 1963. It's the oldest bank in Rwanda. It's a subsidiary of the I&M Group PLC, and is a leading regional financing services group in Eastern Africa. They have their presence in Kenya, Tanzania, Uganda, and also they have a joint venture in Mauritius. And for those just hearing about FMO for the first time too, it is a Dutch entrepreneurial development bank. The FMO, this bank believes strongly that for economic growth and social development to occur, the presence of a strong and formidable private sector is necessary. If we want economic growth in an economy, the private sector must be strong, must be efficient. The inefficiencies in the system must be totally eradicated. If they can be eradicated, they must be reduced drastically. If you're just joining us, thank you so much for joining us. What we have been doing in the last couple of minutes is to look at the third African country with the most thriving SME, and it's no other that we'll be considering, that Rwanda. We'll be looking at various policies, various schemes, guarantee schemes that government has implemented in the country to ensure that it creates the right enabling environment for SMEs to thrive. So we'll be going further to look at another. We have the Business Development Fund. The Business Development Fund was established in 2011, but actually it was established as a wholly owned subsidiary of the Development Bank of Rwanda. And the essence of this was to assist SMEs to access finance, okay? And the particular focus is actually on those without sufficient collateral to obtain credit from traditional financial institutions, at a reasonable rate. The focus wasn't really on that. We have SMEs that can access finance easily from the traditional commercial banks because they have the collateral, they have all of the requirements, okay? But the focus of this business development fund is actually tailored towards those without sufficient collateral to obtain, credit from them. And there's the risk element. People, the banks will have for a premium. So definitely the rate of facilities, okay, with adequate collateral will be lower than facilities that will be given to businesses without adequate collateral. So that's the essence of this that was fund that was created by the government. And this served as alternative finance opportunities, at affordable cost that would help small businesses access credit, and how they do this is by providing credit guarantees, quasi support for startups, manage matching grants, and also provide business development advisory services. And there are various schemes under this, various funds under this. We have the SME Guarantee Fund. They have the Agricultural Guarantee Fund. They have the Rural Investment Facility. They have the Women's Guarantee Fund. And they also have the Retrenched Civil Servants Guaranteed Fund. If you look at all of these, that is tailored toward the MSMEs, okay? The SME Guarantee Fund, the agricultural, the rural investment for the women on the likely underserved, segment of the society, of the country, and the Retrenched Civil Servant Guarantee Fund. And it's also been noted that for ease implementation under this business development fund, the various funds for the SME financial support has been distributed among various ministries and agencies for proper disbursement. And it's important to note that the credit guarantee, schemes, this is to encourage banks, like I said earlier, to lend to the SMEs. Okay, so this government established credit guarantee funds. What it does that it covers partially part of the potential loan losses. So when there is any loss on that loan, the credit guarantee fund, the scheme, is to cover part of it, and this reduces the risk of lenders and definitely would make finance more accessible to small businesses. And for the SME Guarantee Fund, we have the IFU, that's the Investment Fund for Developing Countries, gave out its first development guarantee facility, in Africa to BPR Bank in Rwanda. That was just last year. And the guarantee was worth $5.6 million. And the objective of the loan was to provide facilities for SMEs in Rwanda so that they can grow, they can expand their businesses so that will lead to an increase in job creation and also encourage green investments. And this fund actually came in to bridge a major gap in the investment climate in Rwanda, because despite the high liquidity and adequate capitalization of banks, one thing that was observed, which research showed, was that high collateral requirement was actually a major obstacle to obtaining loans, from the banks. Definitely, no bank will want to give out their money because it's investors fund. You want to protect it. You don't want to have bad loans. You don't want to have bad performing loans. You don't want to make provision for bad debt if you can avoid it. So definitely, and that became a major issue that was noticed in the country. Okay, so in order to assist in bringing this gap that was seen, that was identified, the IF Investment Fund for Development Country issued a guarantee to the BPR Bank in Rwanda. So this fund was expected to serve as a substitute part of the collateral requirement by the bank. Okay, so if XYZ Limited approaches the bank for a facility, okay, and doesn't have enough collateral to cover it, so this guarantee fund is expected to cover part of it. Okay, and that's it. And this scheme is a Danish government guarantee. It is expected that to allow the BPR bank to increase lending to SMEs, thus reducing the exposure to risk. Okay, and it's worthy to note that the BPR bank is the second largest bank in Rwanda, with a strong focus on SME lending, and they have a network of about 40,000 depositing SME clients. Likewise, the World Bank Treasury structured about 257.5 million USD blended finance package to maximize development financing for MSMEs in Rwanda. And this brought together about 5 different sources of finance. We have the credit grants, the concessional loans from IDA, Global Facility for Disaster Reduction and Recovery, the Asian Infrastructure Investment Bank, and all of these help to make available concessional financing to MSMEs in Rwanda. Now, all of these policies that you have seen did not happen in isolation. You could ask, are you saying that Rwanda didn't experience any major setback during the COVID? Were they exempted? Of course, they weren't exempted, because from a 7% GDP growth in 2020, the country was badly affected during the pandemic, because during this period, research shows that there was 30% decline in activities of MSMEs in Rwanda, and in fact, a lot more. Many of them found it very hard to secure financing. However, the government was very strategic, because they designed and executed what we call an economic recovery plan, the ERP, the economic recovery plan. And the objective was to, 1, strengthen social protection; 2, was to assist firms that were mostly affected by the pandemic; and the third was to adopt fiscal policies that would support the growth of MSMEs in the country. And definitely the government realized that you cannot achieve this without adequate financing, so the ERP was supported by access to finance for resilience and recovery projects. So what I'm saying very beginning, definitely that would be natural disasters, that would be unforeseen contingencies, that would be factors beyond your control that you basically, as government, cannot control 100%, but however, you must have policies that are responsive and adaptive, so that the negative effect, the drawbacks, the challenges will be short-lived. It's only be in the short run. In the long run, you would be able to mitigate, further negative consequences on the economy. The last but not the least policy I'll be discussing today is the Made in Rwanda policy. I know that in Nigeria, during President Olusegun Obasanjo's regime, that was also focused on us putting on Nigerian attire, patronizing Nigerian goods. But that's the way to go. If you don't patronize what you produce in your country, if you depend on imported products more of the time, it's going to lead to trade imbalance. It means you're going to be importing more than you're going to be exporting. It's going to reduce the productive capabilities, of your economy. When people are not purchasing, who is going to provide more? And when people are not producing more, how do you expand? You are not going to need more job roles. You're not going to create more job opportunities. You're not going to generate more revenue. You're not going to lead to more income for your people. I'm going to speak to the standard of living of the people in the country. So the last but not the least, the policy I like so much, which I know we also implemented back then, is Rwanda, is Made in Rwanda policy, where the government of Rwanda drafted this policy to improve overall trade balance, by improving the perception of Rwanda product within the country itself. Charity begins at home, indeed. And this was to increase productivity of exporting sectors. Okay, once you produce and people buy, then you can, produce more. Okay, and this policy was actually adopted in 2017, and it's actually a holistic approach that was focused on increasing economic competitiveness by promoting Rwanda's domestic market through value chain development. The motive actually was to make Rwanda a hub for high quality, locally made goods that will boost the economy and create jobs. And you can see significant investment in agriculture, manufacturing, and services, sectors of the economy. And this is important because this I'll call it the MIR, that is the Made in Rwanda policy, that really helped to have this mindset shift among both producers and consumers of production in the country, because that's the way to go. Okay. And you may want to ask yourself, well, this MIR policy they made in Rwanda policy, has it made any difference, any significant difference in the nation's productive capabilities? Has it enhanced competitiveness of the country? Yes, I would say yes, because 11 companies from Rwanda participated in the 7th China International Import Expo, the CIIE, which was held from the 5th of November to the 10th last year at the National Exhibition and Convention Center in Shanghai. The event was organized by the Ministry of Commerce of the People's Republic of China in partnership with World Trade Organization, United Nations Industrial Development Organization, and International Trade Center. So definitely the MIR policy has yielded and still yielding results. So it shows that, like we all say, that the greatest room in the world is that of improvement. Okay, so you start it, you keep developing, you keep working at it, and definitely the set objectives would be realized. The truth is, all of the policies, schemes, guarantees, that government has deployed in Rwanda we can't exhaust everything, in this episode, on today's episode. But what I just tried to do is to bring out some germane, very important ones that I feel that we can share on today's episode. In fact, even the government established the Rwanda Finance Limited, which was to lead the development and promotion of the Kigali International Financial Center, the KIFC. And the KIFC was intended to serve more like an ecosystem that would promote significant inward investment into Africa. And this gives credibility to the country as a highly credible financial center. Like I said, a whole lot that can be mentioned on today's episode. Wow, this is all that I can take on today's episode. Thank you so much for joining us on today's episode. I hope that next week you join us on other programs that run from Mondays through Fridays, 5 p.m. WAT. And if you have any questions for us, feedback, suggestions, kindly send your mail to contact@theamorgate.org. You are the reason why we do this. We hope that you can send your feedback to us during the course of the week, and for your consulting needs, for your training needs, for your communication needs, we have it covered at Amorgate. You can check us up out on our website www.theamorgate.org, and our social media handles is Amorgate, LinkedIn, Facebook, Instagram, YouTube, and you can check our YouTube page, our YouTube channel for all uploaded videos. We have over around 90 videos uploaded on different areas, from leadership to entrepreneurship to geopolitics to core economic issues. You would learn a whole lot from the uploaded videos. Till I find my way to your device next week, I'm saying have a blessed and fun-filled weekend. I remain Titulola Ogbishana saying bye from here.